high yield bonds have hit records before S&P 500. At the same time, the transportation sector also hit records before the Dow Jones, and both of these events are very bullish, and I'll explain why I'm saying that. Also, many of the stock sectors and indices are also at records, so we're seeing a fresh batch of record highs for stocks and equity. However, gold and silver may have entered a possible bear market, and we'll look at the specific levels which define that. And oil could be headed to the $79 area. If that level doesn't hold, we could see a substantial downside for oil. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, June 12, 2026. Please don't forget to hit the like button, share this video, make a comment, even put a thumbs up in the comment section. This will make the YouTube think that this is an important video and offer it to more people. Thank you for doing that. I'm getting a lot of comments. Thank you again. Please keep them coming. If you're a subscriber, stay tuned. We'll be covering various ETFs, large cap stocks, and several of the speculative securities. If you're not yet a subscriber, consider signing up by going to MasterChartsTrading.com. That's my website, and you can sign up for the indicators, the tool that I'm actually using to trade the stocks, which are those green, blue, red, and yellow lines that are available for TradingView.com. It's a free TradingView.com interface. Once you sign up on TradingView.com for free, come back to my site, Master Charts Trading, sign up for the yearly or monthly plan, and you will be not disappointed. I will open the door for you. You will see a very nice setup. Okay. Let's get started. We're currently looking at the high yield bonds, ticker symbol J and K. So what's remarkable or good about this chart is the fact that junk debt high yield bonds have just hit new records, while the S&P 500 has not yet hit new records. It did hit new records, in beginning of June, but hasn't hit new records since. So when high yield bonds hit records before the S&P 500, it's generally speaking a very good sign. And let me show it to you on a longer term chart. This is high yield bonds, ticker symbol J and K. And down below here, we have what's called a correlation coefficient. And so this correlation coefficient shows how much does high yield bonds, how much do high yield bonds correlate, or are they doing the same thing with the S&P 500? And this chart shows that they are indeed doing a very similar thing with one another. So whenever S&P is going up, high yield bonds are also going up, and vice versa. It doesn't always happen, but currently the correlation is very high. It's in the around 70%, so it's pretty high. And then when the high yield bonds hit records before stocks, it means that there is a bullish divergence. In other words, stocks most likely will hit new records. And that's why I'm looking at S&P 500. Even though we're seeing this slight pullback, it is quite possible that that was it as far as the pullback is concerned. We'll just make new records pretty soon. So this is my reading of the situation. I think if you make a comment, we will try to come to a consensus, so to speak. Another good something to smile about is this chart. This is IYT, transportation sector. So a transportation sector just hit an all-time high. There is an old theory from way back when Dow Jones was still alive, and he figured that when Dow Jones industrial average hit records, but the transportation sector did not hit new records, that would be a bearish divergence, and it would warrant more caution. But when the opposite happens, when we're seeing Dow Jones and transportation sector hit records in lockstep, that is a confirmation of Dow theory. So in this case, we're seeing records by the transportation sector, And Dow Jones is actually also pretty close to records. Like we're within just like a spitting distance basically to the all-time highs. But because transportation hit records first, I call this a bullish divergence. So we're seeing a push by various stocks towards new records, and this is, in my opinion, a very good news. And that's why I said both the high yield bonds hitting records and the transportation sector hitting records before the actual S&P 500 hit all-time highs. I think it's a good sign, and we will continue having a bullish outlook for stocks. Another sector that hit an all-time high is a equal weight ETF. This is RSP, ticker symbol RSP, which is an equal weight ETF. So all of the stocks within S&P 500 I treated equally, and this is again an all-time high, showing a broad participation in this advance. Small caps also they could be considered very more volatile than the S&P 500. Also hit an all-time high, and this is like a reflection of a strength of the economy, I think. So because small caps are more economically sensitive than larger cap stocks, they don't really have a lot of cushion. So small caps, equal weight ETF, transportation, high yield bonds all hit all-time highs. This is good news. We're currently looking at the dollar currency index, ticker symbol DXY on TradingView. So dollar has indeed broken out into a new uptrend. In fact, it broke out even earlier here in March of this year. Then we saw a deep pullback, but not yet an entry into a bear market. And then we saw a confirmation of a new bull market for the dollar right there where I'm hovering on the 14th of May. Since then, we saw a retest right there on 29th of May, and then a rally back above the green line. So overall, this is a bullish pattern, and I think this dollar currency index or dollar in general will continue higher versus other currencies. Since we do trade gold here at Master Charts Trading, we're currently looking at gold, and gold is traded in US dollars. So it's XAU divided by USD. And if the bottom part of this equation, the USD, is getting bigger, like I just showed, it's getting more expensive, then it will pull this currency pair lower. So it's XAU gold divided by US dollars. So bottom part of this equation will pull this currency pair lower. Indeed, this is what's happening. We're seeing dollar appreciate while gold is depreciating. So we saw a rejection here back in early May and a continuation lower and a close below this red support resistance line. Find out more about them by going to the MasterChartsTrading.com link. This to me seems like it's a new bear market. So I think we just witnessed a entry of gold into a new bear market on 10th of June, Wednesday. So this Wednesday, 10th of June, I see an entry of gold into a new bear market. The same thing happened to silver, but slightly earlier. So silver also entered a new bear market right there on 5th of June. So it's a little bit more sensitive. But the same general principle apply. Notice the way this price action unfolded. We can see a deep pullback here towards the red line, a rally towards the bullish levels marked by the blue line, and the rejection right there at the blue line on the 13th of May. Since then, again, dollar appreciated even more, and then we see gold and silver. So silver divided by US dollar. We see them both come under pressure. So it seems like both gold and silver have entered a new bear market. Finally, I wanted to look at oil, and oil, notice all of this upward facing arrows since early March. But really, the follow-through did not occur, especially in the latest opportunities here back in late May and early June. In fact, right now we're seeing the opposite. We just made the lower low relative to the previous lows, and we're actually approaching this low from 17th of April. And notice again where it landed. It landed right on the red line on the 17th of April. So I think we will be retesting that level, and currently that's around $79 per barrel. This is United States oil futures. So if we don't hold around 79, I think we will break below 79 and continue down towards like $65 area. To me, this is great news because most likely it implies that the tensions in the Strait of Hormuz are coming to at least relief of some sort, and perhaps we will see some sort of normalcy in the days and month ahead. And today was a little bit of a shorter video because I just did not have time, really, honestly. So head over to MasterChartsTrading.com, click on sign up for one of the products. So I see that what I'm missing the actual breakdown of what's included in each of the plans. I will need to update the website. I think some. Oh, there it is. Yeah. So trading indicators. Trading indicators are these lines on the chart. These green, blue, red, and yellow lines. They are available for this interface, TradingView.com. TradingView.com is a free interface. You can just sign up for free on TradingView. Come back to my site, MasterChartsTrading.com. Sign up for one of the products that has the trading indicators, such as trading indicators and the bundle. And I will open the door for you on TradingView.com so you can see the same indicators on your chart. If you don't really want to do that, you can also sign up for the newsletter. So I send out daily alerts as well as weekly members only video. And this week we'll be covering all of these various securities. The best deal is to get both trading indicators and newsletters on the yearly plan because you get 17% off, which is 2 months free compared to the same price if you were to buy it month to month. So consider signing up. After that, head over to MasterChartsTrading. Consider signing up, and then also don't forget to hit the like button, share this video, make a comment. That's it for this week's recap. Thank you for watching. Have another great trading week. Bye-bye.